Hi, I'm Doug Ramshaw. I'm the president of Minera Alamos, a quasi-gold producer and gold developer in Mexico that this week has made a first foray into the U.S. with a proposed acquisition of Sabre Gold Mines and their Copperstone project in Arizona.
Doug, good to see you. Good to see you. Look, a lot to like about this story. One, it's gold, and gold's doing its thing. And two, it's the US. And three, it really kind of adds to the portfolio here. So I want to kind of dig around all of this and try and see how it fits together. You better tell us what it is that you bought. Tell us about Sabre.
Yeah, so Sabre had the Copperstone mine, former open pit mine that was going to be advanced into an underground mine. So there's a tremendous amount of sunk cost there. Relatively modest 500,000 ounce resource, but two declines, 4,500 meters of underground development, plant infrastructure it was just one of those projects that probably needed to be built, but it was in a smaller company, lacked the balance sheet, maybe lacked the technical team to do it. And for a while, the project was heavily encumbered, and there have been changes over the last couple of years to the encumbrances of it, all of which are beneficial to us now coming in to say we're the team to build it. So extremely excited to add something which complements our low capital intensity projects in Mexico, whilst giving a start to some jurisdictional diversification as well.
Right. Okay. So we're talking about an acquisition, integration, and obviously driving those efficiencies or those possible gains. So, might be worth sort of starting with your current portfolio, so know what the cornerstone looks like. You've got La Fortuna, Cerro del Oro, and the Santa mine. So tell us about the stage of development for each of those, please.
Yeah, Santana's, where our quasi-production is. It's still going through its ramp up after a few problems with COVID and droughts, and then even the permitting environment in Mexico the last couple of years, which I'm happy to say, and really happy. We've been looking at a deal outside Mexico since before problems beset the political environment down there over the last couple of years. So actually very happy that sentiment is greatly improved towards Mexico in recent months. So that this is by no means some scared pivot to got to be somewhere else. It's just a natural step in the de-risking of things, and also a logical step when Arizona is just north of Mexico, and so we're not the other side of the world. Cerro de Oro is in permitting. We're still anticipating permits for Cerro de Oro first half of next year. And La Fortuna is sitting there permitted. But really, it's a really nice exploration project that happens to have its permits there. We want to make it bigger before building it. So we've got this great Mexican production base that's capable of, 140, 150,000 ounces of production. And so adding another near-term production asset like Copperstone, which can contribute another 40,000 ounces. I mean, arguably you've got visibility on something that's approaching 200,000 ounces. A 200,000 ounce production profile of all complementary low capital projects. These are not hundreds of millions of dollars to build. They're tens of millions to build. Santana was a $10 million build. Cerro de Oro is a $30 million build. Copperstone, a $35 million, according to their PEA in 2023, but we know that we can reduce that number. So all very manageable, bite-sized type projects, which I think give us better insulation to capex overruns that have beset a lot of single asset developers that are going for all their size in one big project, became much more susceptible to capex overruns.
I hear what you're saying there, and I'm trying to get at the kind of what the sum of the parts looks like, and the diversification of risk, not just only across projects, but also now jurisdictions outside of Mexico, given what we've seen the past few years. Can we talk about the deal structure itself? So what's it cost you? And what are the sort of financial terms and obligations?
Yeah, so Sabre was riddled with some debt, so we gave a good, healthy premium on the equity side, and had the lenders take a haircut on the debt. We wanted that removed. So all told, with the conversion of debt at a discount to its face value and the premium on the other side, we end up as 86-14 on the pro forma. and will have eliminated that debt. And actually, on a blended premium basis, it's more like 50 to 60%, not the spot premium on just the equity side. The importance of that was, we've looked at other bigger things where you arguably sit back and go, that deal is too dilutive for your shareholders, that they're going to lose the torque from the cash flows from Mexico. But 8614, when you're adding 35% to your resource base, you're adding 60% to your measured and indicated resources, you're adding 40,000, roughly 30,000 ounces of visibility of additional low-cost production. All those key metrics are very accretive when you're ending up as the 86% owner of the enlarged company.
Okay, but it's not just the cost of the money; it time's the killer here. So, how quickly can you bring those ounces into production, and actually start contributing against the kind of the cost of the acquisition?
Very quickly, and I mean, part of this is that sunk cost, and we had a conversation before we started filming. Is like, there are a lot of projects where you can say, "Oh, look at all the sunk cost." I look at sunk cost at Copperstone as that sunk value we can take advantage of. All that existing underground and surface infrastructure and mine development means actually this is a very rapid path. And if I'm putting my optimistic hat on, Copperstone, the deal will close in mid-January. Copperstone could be in production by end of next year. Realistically, end of next year, but probably, realistically, it's Q1 2026. So very rapid. I think developers offer a tremendous amount of value in this market as all the early money goes to the big producers. But I think your development asset's still got to have a near-term horizon. And Copperstone gives us that. So, arguably, with Cerro de Oro permits come on middle of the next year, and we build that kind of on a dual path development with our Mexican team while we're developing Copperstone in Arizona, we could be looking at 2026 at 100,000 ounce forward run rate of the two projects. And the importance of that is it's achievable. Copperstone without the concerns of Mexico, which I think we're going to start seeing permits flow in the new year. But right now, it hedges against some more delays down there. But arguably, 100,000 ounce forward production profile of low-cost ounces is absolutely going to make up for a couple of dry years for our shareholders. So, but you're right about timeline horizons. This is rapid. And it's because we can take advantage of that sunk cost.
Right. Okay. And if I look at, obviously, like gold price is near style at $2,800. It's doing everyone a lot of favors as long as you're producing and selling. This is a kind of small contribution towards the bottom line. How much work did you do technically to understand the economics? It talks about an AISC of around $1,300 ish. Now at the beginning of this process, at the front end of this, now would be the time to actually sort of make damn sure you're presenting the correct numbers. And I say with gold at these sorts of numbers, you could be forgiven if that was 1,500. So what work's being done? What do you know? What are the things you need to address?
Yeah, historically, this project was seen that it's low lying angled structures, which are not the greatest for underground. You either want things horizontal or vertical, some vertical. So you're looking at more expensive cut and fill. We don't actually think that that's needed for the whole deposit. So we think that we can optimize on our approach on the mining costs. The grade's high, so you've got a lot of margin there. We've already, Chris Sharp, our VP project development, joined us from Centerra and had underground experience, has already mapped out a new mine sequence and schedule. So we're going to ensure in the second half of this year we have appropriate working faces so that we can deliver that kind of 600-ton boilerplate capacity that we see, a ton a day capacity we see for the mine. And but it will probably start out a little less than that and work up to it. we're very, very lucky at the company level that we have Chris and the team under the guidance of a director, Kevin Small, who is an unbelievable underground mining engineer. He's already helping us identify the team that we will have on site for Copperstone's mine development, a team that he's worked with before. He, in fact, has worked these kind of low angle underground gold systems, which are problematic in terms of their higher cost, but if you have a handle on that, aren't problematic deposits. So yeah, I think we're going to align everything. The first half of the year is going to be more getting our plant down there, starting to reconfigure the plant at site. The site is fully permitted. There is a permitted plan of operations. There's water, there's air. We're making some elective changes to the processing part of that permit that will allow us to use both flotation and cyanide leach. Right now, we could put it into operation and you pick one or the other. We want to have some flexibility on the processing side, so it's a bit of an elective change for us, which we think is beneficial for the overall economics of the project. So if we submit those in the first half of the year, we can have that paperwork back basically lining up with us ready to go. But the engineering, we've already been during the due diligence process, and we've looked at this project for years, but in recent months, I've completely mapped out a mine schedule here for it. There's very little rehab underground that's required. The PEA numbers had, I think, 35 million in capex. About $600,000 of that was underground rehab, so very little. Half that PEA capex was plant and processing. Are we able to save all of that by having our plant? No. But in a world where everyone expects capex numbers to go up, the capex numbers for Copperstone are not reaching the 35 million PEA numbers. In fact, we probably think that on the low side, we can shave $5 million off those numbers. Again, that's why it was a perfect gap fill for us. They had this project, they needed a team. Oh, the one thing they didn't have on the plant side was the plant. We happen to have that. And in fact, it was oversized for Fortuna where it was destined. Now we can have a 1,000-ton grinding circuit at Copperstone and another circuit ready from that mill that can go down to Fortuna in due course. So a bit of a divide and conquer with the same mill going effectively in time will be split between two projects.
And so talk through the economics of that. You talk about like shipping it down from Copperstone down to Mexico. What's the cost of that?
Well, it's in Val-d'Or, Quebec right now. So our team,
Right.
on the day we announced the arrangement on Monday, we had two people just checking through the 26 C cans there, and it's
Right.
in a storage yard. So that's going to come down. It's going to be $300,000 or $400,000 to move it down to site.
So to which side?
Maybe the whole mill will.
It will go to Copperstone. Right. Okay.
Yeah.
Okay. Sorry,
Yeah.
I was conflating. I thought, crikey, you're talking about Mexico.
No. In time, part of it can move on to La Fortuna, which is great.
Right. So that's just phasing of where it resides.
Yeah.
Okay.
Yeah.
Got it. Understood. And when in terms of so you're looking at the savings and shaving costs where you can. What's the kind of upside here, given that you seem to have not just the expertise but maybe access to the market? What's the opportunity here at Copperstone over and above what you already know? Is there exploration upside to this?
Yeah, I mean we're looking at it right now, building the mine plan around the 6-year life that was presented in the PEA, which really takes into account less than 60% of the resources there. There's also a lot of exploration upside. There's parallel zones that literally have had 1 or 2 drill holes put into them. So we don't see it as just a project you're building, getting 6 years of life out of, and then what are you going to do next? There's obvious exploration upside there at the project, but it's a kind of exploration project upside that you want time. The 6 years is great. It gives you very quick, rapid, 1 year or less payback. You've got appropriate runway on your resource, on your mine life, to actually deploy capital back into expanding the resources over time, not to be in a rush because you're staring down the wall at a 2-year horizon before, well, where's the next gold that's going to go into our mill? So I Darren is the mine builder. To some extent he hates exploration because it's a cost for him, where especially if it's not funded out of cash flow. But he sees it like our geos on the board, that there is, and Sabre presented it as something which has 1 million ounce potential. Well, every company talks about, our project has 1 million ounce potential. I think it will take time to see what the true potential is at Copperstone, but it's certainly beyond the 6-year mine life.
Right. Okay. Well, look, I think we can sort of see the benefits for Sabre Gold shareholders in that they were kind of cash constrained, and I should say a lot of white noise out there claiming the same sorts of things as Sabre may have been talking about for the last year or two, and their share price has been under pressure as a result of that. But for your shareholders, can you just please explain that if you don't mind, the nuance of the difference between looking at something bigger with much bigger kind of blue sky upside versus, I guess, the certainty of near-term production? Why was that as an easy choice for you?
It's just a natural fit for us. I mean, I want to go for bigger projects over time. You build out your foundation of cash flow, you can do that. Cerro de Oro is a 60,000 ounce a year mine that can scale up. We know we're permitting for something which is more like 80,000 ounces a year. You don't build a production profile just bolting on a whole bunch of 40,000 ounce a year mines. But this was a special one. We have in our slide deck, capital intensity for projects, and which one happens to fall. Cerro de Oro and Fortuna, industry-leading capital intensity. What happens to be the third lowest capital intensity project out of this peer group of projects? It's Copperstone. So when you're trying to build out that cash flow that can be directed into bigger projects, much better to have projects which are cheap to build, quick to pay back, and now start generating the very cash that can allow you to go after bigger things. Copperstone, if it's just a 40,000 ounce a year producer that has a longer mine life to it in due course, it's a fantastic contributor to the very cash flow that allows you to go after the bigger projects and go after those bigger projects where you're funding them with your own cash flow, not running it. If you have capex overruns, it's annoying. It's like, we're going to have to blow 3 more months of cash flow or 6 more months of our cash flow to fully fund this thing because of this capex increase. Or you're not having to go back to the market and saying, well, we've had a big capex blowout, and the only way we can actually meet that is to do some big dilutive equity raise. So I think it's a highly complementary asset to what we're doing in Mexico, and it's our first foray outside of Mexico. But we've been looking for years for something, because de-risking is about being multi-mine, then being multi-jurisdiction. I said that in 2019, and I will continue to say it because it's standard kind of industry practice. De-risking de-risking yourself. You want to be a multi-mine company, and you want to be multi-jurisdiction. We will go multi-jurisdiction before being multi-mine, but very quickly can go from 1 mine to 3 mines in 2 jurisdictions. So, this time, 18 months from now, Matt, we should be a 3-mine company in Arizona and Mexico. And that's a really nice de-risked production portfolio.
Yeah, I won't go over old ground here. We talked about Claudia Sheinbaum and the effects of the new government, or the intent of the new government, when we were in Colorado Springs. So I won't go over old ground. People can look to the previous interview on that one. With regards to the both boards, obviously you said there's some complementary skills and there's probably a bunch of overlap as well. What's your intent, or what's the process there in terms of driving efficiencies across both groups?
This isn't. This is not what would fall into those kind of a merger type. This is a market premium takeover from them in that regard. I think there's some personnel at site that we will transition with, and see if they want to continue, and see if they're right. Like I think we're but this is not at the end of the day a blending of two corporate boards or corporate management teams. This is not one of those ones where it's like they get a seat on the board or two seats on the board. It was an 86-14 split. It's a premium on the takeout, and it's not some merger. So yeah.
No, I know, but you still kind of want to across both groups see the benefits.
Well, you want to have transition for sure.
Yeah.
They have a history with the project, and we have a history that goes back to Darren's first site visit there was 9 years ago.
Really? Wow.
You don't want to be arrogant to think that, it's just, hey, everyone, piss off. Thanks for the asset. We don't need you anymore. So, we're looking at transitioning things in such a way that, this crucial first 6 months, which will, hopefully all lead into a completing the job in second 6 months. We have all relevant hands on deck, right, to ensure a smooth path towards that goal of kind of circa end of next year, being ready to hit the go button.
Okay. Now, obviously, you're a producer. You are a producer, and that's quite a good place to be in this gold market at the moment. But you also have significant number of development stories coming up behind it. So, how's that with your institutional shareholders? Has that kind of helped you in terms of, are they coming to? I always say this: bankers always offer you an umbrella when it's sunny. Where you've got the money available for the growth side of any of these stories or for future acquisitions, do you feel?
Yeah, I mean, our institutions have been buyers this year. I mean, we don't have many of them. They've been buyers. Most of our buying this year has come from family offices and big shareholders that see the merits of this business model. The typical resource institution, I think they want companies that are producing a 200,000 ounce gold mine, right? Developing rather than that profile from a number of what they might consider smaller ones. It's on us to make ourselves relevant to them. Although I'm much happier with generalist investors and the family offices who I think have the patience and long-term perspective at the business model. So big thing over the next couple of months before close is reworking things with our current lenders to make sure that we have flexible funding capacity from them. And those conversations will begin in earnest in the coming weeks, so that we are in a position to have some flexibility with our current lending package, which was tailored towards Cerro de Oro, that we want to be able to have access for Copperstone.
Okay, but obviously there was debt. I think you say there's a bit of a haircut there, but it hasn't eradicated it. So how do you kind of treat the various credit facilities, debt facilities that you've got sitting on the books at the moment? Would you like to get rid of it, or do you not mind some of that sitting on the books going forward?
Well, all of Sabre's debt was eliminated as part of this.
It's all gone, 100%.
It's all gone. Yeah, they'll have maybe in terms of actual creditors with security or anything like that, there'll be no secured debt on the Sabre side. That was a key part of this, because the last thing you want is to get into creditor, into creditor paperwork and the like.
Was that debt for equity, or?
Yes, as part of this.
Okay,
part of this deal, we're converting a bunch of their debt for equity.
Okay, it's not eradicated per se, but
but converting it.
Would you consider that? Would you consider that potential overhang then, in terms of they'd want to kind of try and get their cash back as quickly as possible? Will they be dumping into the market?
No. I mean, one of them is. These are people that have kept this thing alive, but they've kept it alive because they've always liked the asset. Now they've finally got a situation where there's the right team that can build this thing, and they've indicated tremendous support on that. I mean, I can say that, they can say that, the proof will be in the pudding, but in reality...
Is there not a lockup? Is there a lockup?
They're locked up through the vote and everything else, but no, I mean, I think that they were obviously trapped as equity, and they're equity shareholders as well as lenders. So they were somewhat trapped in Sabre. We've given them a path, but more importantly, a path for them to realize what they had originally sunk capital into this project for. Star Royalties is another creditor that will be just an equity shareholder at the end of this, and they've already shown a great amount of support for this project. In that one of its issues in the past was it was heavily over encumbered. They had a 10% stream on this project that was amended down to a 4% stream, and that's a smart move. Sometimes if a project's so encumbered, you got to question whether the very stream that you have that you put so much value on is worthless, because it will never be developed. Now, with an amendment there, a supportive working relationship with Sabre, and that they've already working with us on some other amendments to our satisfaction. That is what you want to see in a partner like that. These are people that actually see the value proposition of Copperstone moving forward, which can be good for them now as equity holders, probably actually better than them as secured creditors.
Yeah, and I think we saw that with Crora Resources and Matrix Royalties. They went from I don't negotiate 7% NSR down to 4%, was just about made it palatable. Okay, so that's kind of interesting. So I guess next steps for you, obviously you've got to get through this phase. You're looking to get a close. When do you say? So January time?
Yeah, kind of third week of January it should close.
So what happens between now and then?
Well, we're building out members of the team that will be there. We'll be looking at the logistics of moving our mill down there. We're going to continue refining our internal modeling for the deposit, trying to come up with a bit of a more accurate kind of understanding of what our cost savings are going to be with that mill going down there. Reworking things with our lenders. And also getting ready for what should be I think, some much more positive headlines out of Mexico on the permitting front as we enter the new year as well. So a lot of dual track work on our part to support dual track development of our next two mines, that's for sure.
Okay, and if we're obviously looking, I think people will sort of look in at Copperstone and go, oh, it's got a PEA, but you're talking about getting production by the end of next year, potentially.
Yeah, and I think if it was a PEA on an underground deposit that had never had any development work done or anything else, every step of that sunk cost kind of is a de-risking thing. I think there's some drilling, the underground drilling that we'll want to do that, because of that underground development, you are doing it in a very cost-effective manner down underground. So because you want to be absolutely comfortable with grade, proposed mining dilution and everything else. And there's a big dilution factor that's already in that resource statement. The good thing about the 2023 PEA was it addressed a lot of things which had not been addressed before. And so we'll continue to refine some of that in parallel with the development. But this is not a project that will go into PFS and feasibility study and the like. And the lenders that we work with have a comfort level that they know that, and they're still prepared to look to support it. So it's kind of like an open pit heap leach. We never even had a published study for Santana, and yet we had greater than feasibility study quality of met data there. So it's sometimes the data that you have, maybe it's not wrapped up with a pretty little bow on CDAR, which you'd need to do if you're trying to raise $200 million. But if you're raising $20 million in debt, there's different hurdles there, and including maybe you're paying slightly higher capital. But again, if you've got a sub 1 year payback, sometimes it's not a bad thing to work with a lender that's more flexible, rather than the one who's going to get you the cheapest debt that is going to have tremendous amounts of hooks and covenants into you because of the dollar value that's at risk, right? So this one, even in that regard, fits very nicely in with what we've been doing with our lenders.
Okay, and I'm just looking at the life of mine, which is 6 years, and it kind of begs the question about how you kind of phase your capital allocation across all projects. I know you've got potentially looking at some flexibility there, but Copperstone margins, very, very good. It's showing sort of IRR of 71% at $2,000 gold. Here we are at nearly 28,000. $28,000, $2,800 gold.
Yes.
So
Yeah.
one would expect the payback to be pretty quick. But at the same time, you got to get focused on the build of in terms of getting Cerro del Oro up and running. Obviously, making sure Santana's running and then getting Copperstone running as well. So they're drilling for exploration upside on Copperstone to make sure that life of mine continues to be 5 or 6 years going forward for some time going. Is that, when is that going to get factored into the to-do list?
Probably, the real raw exploration to see is Copperstone, that million hours potential, probably only gets going a couple of years into its operation. But well before you run into any problems whatsoever. And we know with Cerro del Oro, there's base case, it's 8-year life. Upside case we're permitting for is 13 years of life. And a very simple build that can be done by the team down in Mexico while we're focusing on Copperstone. I mean, it's just a giant earth-moving exercise in Mexico. It doesn't have the same complexities. So I think the crucial thing anytime you're looking at underground is to have the right team. And I think people will see in the new year the pieces we put together that will remove any question, of, hang on, what? People just think we're open pit heap leach guys because that's what the team's been doing in Mexico the last little while. But I think they'll realize that actually we do have that underground expertise, and we're going to augment that with a really fantastic team there at Copperstone in 2025 that should reassure anyone that, to me, when it's underground mining, the mining personnel you have is actually more important than what equipment you're using underground. Like, you've got to have the right mining brains. We are very, very lucky with having those mining brains on our board and in our management team already. And so we'll augment that in the early part of 2025.
Well, what a lot of fun trying to work out the kind of sequencing of that kind of cumulative gold ounces over the next 5 years or so. Doug, appreciate you coming on and kind of filling in the gaps a bit. Super excited for what you're doing. Stay in touch, let us know how you get on. Very good.